If you pick the wrong ETF, you could literally be giving up tens of thousands of dollars over the next decade. So today, we're putting the three most popular ETFs against each other, VFV, XEQT, and VOO, to find out which one actually wins for Canadians in 2025. I'll rate them round by round on fees, returns, risk, taxes, and more, and by the end, we'll crown a clear winner. And trust me, the one you think might win might actually surprise you. I'm Matt, I'm 22 years old, and I've built a six-figure stock portfolio in my early 20s. And I've also made just about every ETF mistake that you can make while investing. So with that being said, if you're new here, please subscribe. It really helps me out. And with that, let's get into round one. Let's start with the most boring but the most important topic, fees. VOO charges about 0.03%, VFV costs around 0.09%, and XEQT comes in close at 0.2%. So VOO looks like the clear winner, but if you're Canadian, buying it means that you're paying foreign exchange fees to get into US dollars. On the flip side, VFV is Canadian listed, so you avoid all that nonsense. And XEQT is also Canadian, but it's higher because it bundles multiple ETFs together. So for Canadians investing in Canadian dollars, VFV gets 3 points for the best balance of low fees and simplicity, VOO gets 2 points for having the lowest raw cost if you're already investing in USD, and XEQT gets 1 point for its convenience, but the higher MER holds it back. So after round one, VFV takes the lead. Now moving on to round two, performance and returns. Now let's talk about what everyone actually cares about, and that is returns. Over the last year, XEQT is up around 16%, VOO is up around 12%, and VFV is up around 14%. So right now, XEQT is beating both because global markets, especially outside the US, have been recovering pretty hard. But if you zoom out over the last 5 to 10 years, the S&P 500, meaning VFV and VOO, crushes the global average. So XEQT wins the short-term momentum right now, but VFV and VOO have proven their consistency. VOO gets 3 points for its long-term history, VFV also gets 3 points because it's the same index in Canadian dollars, and XEQT gets 2 points for the most recent outperformance. After round two, VFV is still in the lead at 6 points. Now moving on to round number three, we have diversification and allocation. Diversification means how many eggs are in your basket, and for VFV and VOO, it's one basket, and that is the US. Meanwhile, XEQT has global exposure with 45% US, 25% international, and 25% Canadian, and also a little bit of emerging markets. If the US keeps dominating, VFV and VOO will outperform. But if the rest of the world wakes up, then XEQT is the play. So XEQT gets 3 points for diversification, VOO and VFV each get 1 point for their focus and simplicity. So after round three, VFV is still in the lead with 7 points, and VOO and XEQT both have 6. Before we move on, if you haven't subscribed yet, please scroll down and click that big red button. It really helps me out. And now with that, thank you so much. Let's get into the rest of the video. Round number four is currency and tax drag. Now this one is where most Canadians quietly lose a lot of their money. See, VOO is in US dollars, meaning you'll pay 15% withholding tax on dividends plus transaction costs to even buy it. Meanwhile, VFV is in Canadian dollars, but since it holds US stocks, you still have that 15% tax that still applies to the fund. And XEQT, well, it's globally diversified, which means there's multiple layers of withholding tax, US and international. So while none of them technically escape the tax drag, VFV is the cleanest and the cheapest for Canadians. So VFV gets 3 points for simplicity, VOO gets 2 points if you hold it in your RRSP and you invest in US dollars, and XEQT gets 1 point for having too many layers of foreign tax. That leaves our scoreboard at 10 points for VFV, 8 points for VOO, and 7 points for XEQT. Now moving on to round number five, we have risk and volatility. The maximum drawdown over the last 10 years for VFV and VOO, meaning the maximum amount it has fallen in that period, is around 32%, compared to XEQT, which is 28%, and that's because it's more diversified. Similarly, over the last 10 years, the volatility for XEQT is around 20%, and for VFV and VOO, it has been up to 28%. And because those two ETFs only hold US stocks, they are completely at impact by the US economy. So VFV gets 2 points for its balance, VOO also gets 2 points for being the same thing, and XEQT gets 2 points as well for being higher volatility but having more diversification. Everybody ties in this round, so the scoreboard is 12 to 10 to 9. Moving into round number six, we have ease of use and accessibility. Now, this one is very simple. VOO trades in USD, which is annoying for Canadians unless you already hold American cash. VFV trades in Canadian dollars, which means it's easy for literally anyone in Canada to buy it. And XEQT also trades in Canadian dollars, and it's a one-fund portfolio, so there's no rebalancing and no stress involved. So XEQT gets 3 points for pure ease of use, VFV gets 2 points for being simple but not one-stop, and VOO gets 1 point for being the hardest to access for Canadians. So VFV is still in the lead with 14 points, points, XEQT is in second with 12, and VOO is at 11 points. Now on to round number 7, we have the 10-year scenario test. Let's say you invest 10 grand today and hold it for a decade. If the US keeps crushing it like the last 10 years, VFV and VOO both grow to roughly $27,000. Meanwhile, XEQT might be slightly behind at $25,000. However, if global markets outperform and the US slows down, XEQT could actually come out ahead. So because we have no idea where the market's going to go, we're going to give this a split decision. Every ETF gets 2 points. So there we have it. After 7 rounds, VFV takes the crown with 16 points. XEQT comes in second place because it's perfect for people who just want to set it and forget it and never rebalance their portfolios again. And VOO still earns respect for the absolute lowest fees and its clean exposure, but it's just not as convenient for most Canadians. Unless, of course, you're investing in your RRSP. If you enjoyed this video, hit that like button and subscribe, and let's keep stacking money the smart way. Comment below which ETF you're holding, VFV, XEQT, or VOO, and why, and I'll make sure to reply to the top comments, and you maybe even get featured in one of my next videos. Remember, this is just my opinion. Always do your research before you start investing. And with that, I'll see you guys next time.